Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and we have a bunch of people in here. Good. Casper, hello. Trader Isaac. Is Larry on from Louisville? There he is. All right, so Larry, thank you very much. Larry from Louisville, Jedi Kid, sent me a box, a package that I just opened up the caps. There's 3 boxes. One with caps, 3 of them. The other, I have one more upstairs, so I figured I'd open this live. So, very nice package. Obviously professionally done, probably by the little lady. And this is the second time Larry was good enough to send me some wonderful gifts. And I feel like it's Christmas. Well, I guess it is Christmas. What do we got here? Holy cow. This is beautiful. Nice. I will get use out of this. Beautiful. Thank you very much, Larry. I'll open up the third package when I get back upstairs. But absolutely wonderful. Thank you. Merry Christmas to you and your family as well, please. WG Shocker, hello. Franklin, hello. Redfin, you got it, buddy. I don't think it's ready to go down yet. I still think they're going to pop it up higher. Nestor, hi, Bob. 900 billion stimulus deal going to pass. Santa rally. Yeah, I think so. We could get a sell the news event, but I think that's why the Federal Reserve came out on Friday. I believe it was after the close, and they okayed the banks to begin buying back their own shares. So what we need to keep looking at is one thing that's not getting a lot of press, and that's that the Federal Reserve remains very, very dovish. And I mentioned this over the weekend with members, is that here's a weekly chart. And yields are poised to break out. So this is good for the bank stocks, assuming that the market holds up. So with the passage of stimulus, with the continued dovishness by the Fed, it's kind of concerning where I net long with this market, the fact that yields continue to move up higher since their August lows. Think about it. It's good for the banks as long as the markets hold up. MacArthur, glad to be here from the Smoky Mountains. Welcome. I keep trying to tell everyone about tips, debt, and yield. Thanks to you, Bob. Oh, thank you very much. You're very welcome. Pat, hey, Pat, Jets are winning 20-10. Amazing. Okay. Joseph, all the best to you guys in the coming week. Have a great Christmas. Merry Christmas to you and everybody. The lovely Trisha is on. Hello, Trish. Merry Christmas. Happy Hanukkah to everyone as well. Kwanzaa. Casper, hey, Bob, all good. I waited with shorting. When can we finally go lower? You want to short the DAX and the AEX? I know. They look good. I haven't looked in a few days, but the last I looked, they look pretty darn good. So I don't think yet. And yes, Trader Isaac, if you could smash that like button, thanks for the reminder. I'd really appreciate it. I'm trying to get to, what is it? What do I have? 3,800, something like that. Subscribe. I'd like to get to 4,000 subs by the new year. Trying to, long shot. We'll give it a try. So let's take a look at how the futures are opening up. We'll kick things off with the U.S. dollar. This is a 4-hour chart. These all be 4-hour charts unless I say otherwise. Dollar moving up higher. I think the reason why this is because that stimulus was much lower than the initial almost $2 trillion that Pelosi said no to. So I could see a short-term rally in the U.S. dollar. Longer term, remember last week, we hit lows last week, not seen since April of 2018. So the dollar, we may get a short-term pop here. We saw a few of them last week. All of them failed. Let's check out, let's go to equities. Let's see how equities are behaving. Flat. We did gap up, but we gave up those gains. Let's set an alert here. We'll set an alert to let us know if we break out to a new session high. Good. Mid caps. Mid caps are up over a 0.5 percentage point, but a fade as well. We'll go to currencies in a moment. Where's the Nasdaq? My voice is going again. Nasdaq up about a 0.25 percentage point. Again, a bit of a fade here. You saw a big sell-off on Friday. We had a strong 15-minute bar coming back at the end of the day. But a lot of volatility. Let's take a look at bond prices. Oh, you know what? Before we leave equities, let's look at the Russell, which has been very strong. Look at this reversal bar here. Still up nearly spot 6%, but we have a reversal bar here. So let's create another alert. Okay. Now let's take a look at, excuse me. Let's take a look at gold. Gold is up. So that's a good sign. We had the dollar up, gold flat, let's say. Gold is very close to, let me bring up this chart, and I'll show you where gold is at from a macro view. I did a video, I posted, I believe, yesterday on gold going into 2021. Here's the big view on gold. This quarter, we tapped that, I think it was last week, we tapped resistance at around, let's just call it 1900. Where do we close? Just shy of it. So that 1900 mark represents real serious technical resistance. But if we recapture that 1900 mark and we close there on a quarter, which is totally feasible, that marks a very strong psychological signal, especially as we proceed into the new year with all the dollar printing. With Bitcoin shooting through the roof. We know that Bitcoin is correlated to the CPI. Plus, you have institutions now buying up Bitcoin. So at what point does gold begin to seriously catch a bid with inflation now on the rise. It's really undeniable at this point. So gold very close to putting in a potential bullish key reversal on the quarter and a major breakout. And man, if we close above 1924, major breakout leading to probably new all-time highs very early in 2021. Copper had a good week last week, down slightly now. I'm looking at protein, cattle, lean hogs, because ag has had a very strong move. Now we're looking for protein, which has been lagging, to break out as well. Now this is a weekly chart. And we're looking at these not to buy hog futures or cattle futures, but more so to do a pulse check on inflation. And that helps guide us to determine how heavy do we want to be in gold, silver, the miners. We added more to the gold miners last week on that pullback. It was up on the week, but we had a pullback. I jumped in more. We bought more, actually opened up a new position on the silver miners. Silver is very inexpensive right now. So we're going to be looking to add more to that trade as we proceed into 2021. And you can see here, protein, lean hogs, getting ready to break out. Beautiful multi-week consolidation. We broke out back here the week of the 23rd of November, pulled back, retest, now potential follow-through to the upside. I want to take a look at cattle. Monster. But you listen to the Federal Reserve. Oh, there's no inflation. It's well below our target. Oh, no, we need more inflation. They're going to get it. So cattle futures breaking out, they're going to go a lot higher. Lumber, big housing boom here. Look at lumber, ripping. All commodities, all in fuego. Gold, nobody wants it right now. That's why we're buying it, or at least the miners. Nobody wants it. Natural gas, this is a weekly chart. Natural gas breaking out. At least trying to break out. No breakout yet. Close. No cigar. Doesn't matter until it does it. Palladium. Consolidating. Platinum. Monster. Taking a break here. I'll get it right some point in time. There we go. Getting ready to break out. Platinum, buy. Frozen concentrated orange juice. It won't let me pull it up. Damn it. I always wanted to pull up that chart. From Trading Places, for those of you that are old enough to remember, let's take a look at bonds. How are they opening up? Bonds are strong. Yields are pulling back. Attempting to break out, getting rejected. Let's see what happens there. Wheat consolidating. I'll tell you, I think that 2021 is going to be the year of commodities. Look at corn. Look at corn here. It's down right now, but look at this breakout on Friday. Oil. We'll go with light sweet crude. Oil down. It's had a nice run from the weekly charts. It looks as though there's more room to the upside. But at current, down over 1 1/3%. We'll see if that holds up. But it doesn't look good. Silver. Again, we opened up a long position of the silver miners last week. We'll be adding more. If we get orderly pullbacks or if we get significant breakouts, we want to add on strength. If the setups come, good setups, we'll add more, a lot more. So silver consolidating, holding a breakout, which is good to see. We had broken out on Thursday here, this 4-hour bar, then retested, held. Now we're consolidating gains. Good stuff. I think we move up higher. Let's circle back a bit. I just want to check out the Nasdaq 100 really quick. See if anything has changed there. Now we're up about 1/3%. VIX. Ooh. Ooh. VIX is up. And it's up strong. Bullish reversal bar, 4-hour time frame on the VIX. Yet, the S&P 500, at last look anyway, was up as well. It's now actually flat. So the question becomes, is the passage of this stimulus deal already priced in? I've been of the mind that, before the election, they were trying to negotiate a deal of roughly $2 trillion. And that's the number that traders had put in their minds. Yet, they didn't get that. So is 900 billion, which is a monster number, is that enough to keep this market moving up higher? Because it's certainly been priced in. So you got to wonder. It's going to be an interesting day tomorrow, starting to weaken up here on the S&P. Because when you get the VIX and the S&P 500 trading in lockstep, meaning trading higher together, it doesn't end well for equities. Every single time that we see this, it doesn't end well for equities. Now, this is only a 4-hour chart. So we'll watch it. We'll see how we close out the day tomorrow. But we could be setting up for a sell the news event. So if we're looking to put on any new trades, I would wait to see how everything unfolds tomorrow. Meaning, if you're going to put on trades, wait until that final hour of trade. And remember, this is going to be a very light volume week. All the traders out there of any worth, the heads of these Wall Street banks, they're over in Stad. They took their private jets over the weekend over there, going out to Aspen. And they are skiing. The computers are going to be in charge. They'll keep the market in check between now and New Year's, unless something unfolds. So I don't expect much here, but it's concerning how we're trading at current. The fact that we gapped up and now here's a 15-minute chart to illustrate. Now we are giving up those gains. So let's move on to economic data that is coming out this week. McConnell says stimulus deal done, but no votes until Monday. They're going to kick the can. I thought they would have voted on this already. Okay. All right. Not much here. Consumer confidence on Tuesday. Wednesday, looks like they're pulling forward initial jobless claims from Thursday to Wednesday. Durable goods are coming out on Wednesday, folks. That's a huge, huge number. Those are your washing machines, your dryers. They should do well with the housing boom. So it's an abbreviated week with some strong reports or market-moving reports that are coming out. But again, I think the computers are just going to be set to keep this market in check and not allow any dramatic moves either up or down. Let's go to some chart requests. First, let's take a look at some comments. M Games, good evening, sir. What kind of impact will Tesla have on S&P Monday? Whenever you get a chance on that, I think whatever impact it would have, it's already had. I don't think all that much. Suresh, hello. Will, hello. Will, I can see I have legs. Okay. Oh, you guys are talking football. All right. Chris asks, because House was supposed to vote today. Yeah, I guess they didn't. Sunil, hello. How are you, sir? Okay, let's, $900 billion bill is a lot, but $600 per person. Yeah, give the peasants pennies. Yeah, it's shockingly, it's shocking how little they're giving to the little. This is the largest transfer of wealth ever seen. This whole ordeal. The books, if they're allowed to be written, are going to be amazing about the transfer of wealth that's taken place in 2020. Let's bring up. Let me refresh this. I'm in the members area. All right, let me make a list of names. We're going to go over JWN. PLTR, which I like. I already took a look at that one. AWK. PFE. We got a lot going on here. TXG. And Walmart. All right. All right, let's do this. Folks, this segment is brought to you by our friends over at TrendSpider. Remove the grunt work from your trading. Save time. Speed up your analysis. Improve your accuracy using TrendSpider and automated technical analysis. With a click of a button, know where your trend lines are at. I use it. It's good for experienced traders. I call it my spell check for technical analysis. And for newbies, if you want to practice your drawing of trend lines, identifying patterns, use TrendSpider, then validate it. What I do is this, I'll draw my trend lines like this one here. I've already done this one. And then I'll send the automated trend lines up, validate how accurate I am. And it's good for newbies or for experienced folks. We have heat maps, indicators. Love the heat maps. It shows you where there's heavy consolidation. And the fact, this is St. Joe, one of my watch stocks for the coming week. This is a potential short. Huge breakout out off of this base. Smash through this second resistance level. It's probably going to go higher, but it's going to be a short. 35% discount code below. Take advantage of it. TrendSpider. All right, moving on. We have a lot to go over. Nordstrom. Now, I believe this was Jim who wrote in the forum about being short this or shorting this. Hey, Big Bear. We'll take a look at it for you, Big Bear. All right, so Nordstrom's monthly chart. You may get some tax loss selling here. It's broken out. RSI is broken out. Weekly chart. It put in a new weekly low last week. Daily chart. Now the daily chart is definitely concerning. And you can see they're picking up a small heat map at the support level. My guess is if I put on my volume by price, we have a bit of a volume shelf there. Small though. I don't think this is real serious support. Let's talk about support levels here as you are short. Right off the bat, you're going to have a support level at 28.84. That's where your volume weighted moving average is at. If it fails to hold that support level, 26.40 is real good support. You may want to look to scalp your profits at that price point. But I think in the near term, given the fact that we'll probably see some tax loss selling on Nordstrom and the fact that we put in a new weekly low, new daily low on Friday, we're probably going to get new lower lows moving into the new trading week. No guarantee. Excuse me, folks. No guarantee, but that's my guess. If we gap down below 29.74, I think that we could pretty easily see 26.40 on JWM. PLTR. Not much daily analysis to be, a weekly, monthly analysis. What the hell just happened? All right, so we're in a triangle formation. We probed the lower band of support last week, and it held. Pure and simple consolidation here after a huge run up. Here's your volume weighted moving average, which will act as support. I would be worried if we put in a new weekly low this week. I would avoid the long side for a couple of reasons. One, we broke down below support. We had broken out back here on December the 17th. Then on Friday, we failed to hold it. We broke down. This is a bull trap or a breakout point failure. So my guess is that we'll retrace back down to a support level maybe the 23.49 mark. We still have a breakout in RSI, but we're not getting a follow through to the upside. I'd be aware of this price action. You know, if they gap it up higher on Monday, different story. All right, if we close back above this support level at $26 a share, that's good stuff. Then it becomes a long. Right now, I think it's more of a watch than anything else because we want to make sure we don't get a sell-off. We want to buy on strength. Now, if it comes down to $23.50 per share and we consolidate, well, then that may be a good place to go adding more or opening up a position. So PLTR is a watch right now. AWK. AWK had a nice run. It got extended. We had broken out back here the week of November the 2nd. Now we continue to put in lower highs, lower lows. They tried to rally it last week, which they did. However, it faded. Daily chart. We have a lot of support below here, as noted by these volume shelves. The 146.71 mark is very attractive. This is a show me stock. It's under a lot of pressure. It's got to show that it's not going to put in new lower lows. If it does, it's coming down here to 146.71. If it does not, if you see a breakout and a close above 154 to 156.50, then that becomes very, very attractive. So I would wait and see whether or not we show signs of strength, or if we continue to weaken up, I would wait for 146.71 to get hit. Look at that price point, see whether or not it holds. Then you can get involved with the trade. Pfizer. I went over this chart last week and I wasn't excited about it. And I'm less excited about it now. You would think with the drug that is being sold everywhere, it'll be doing better. It's not. And this is one where you might get some tax loss selling. So a big bearish reversal bar. This stock should be going up. It's not going up. That's a concern. Weekly chart. Horrible week. Now, the positive is that we retested one support level, closed above another one at 37.58. That's good. You want to make sure that we don't see a new weekly low. If we get a new weekly low, I would avoid like the plague. If we hold this support level at 37.58, maybe it's time to nibble. But I would give it a couple of days to ensure that this support level will hold, because the monthly chart so far, butt ugly. Weekly chart, horrible. So I would give it a couple of days before I got involved to the long side. You can see nice bullish reversal bar on Thursday. Friday, a retest. You want to see more consolidation here. Let's make sure there's no more selling pressure behind last week's selling pressure, because they could be there. And you want to make sure they're gone. Watch the daily volume bars. Make sure any down volume bars are dropping off dramatically to well below average. That's what I would look for. And in fact, let's take a quick peek at the Stokes. I wouldn't touch this. Your Stokes is still declining down below the 50 mark. RSI's down below 50. Volume to the upside, to the downside is well above average. You have institutional distribution here. I would avoid. At a bare minimum, watch for consolidation. Where we bottomed out on Thursday of last week was resistance back in November. So we've retraced all of those gains. So let's make sure that support level holds. We'll revisit it. TXG. I was long of this one. Made a couple of bucks, not much. But it hasn't done much since I sold it. Bob, have you ever had a massive loss that felt like you got hit by the biggest linebacker in history? If so, what did you do to recover emotionally? Yeah, I took a hit. I took a major hit. But I bought a Mercedes, which was the worst thing I ever did. I went out and I spent more money. So I don't think that's the answer that you're looking for. And it had to do with the dot-com crash. And what I did, honestly, it's a good question. The question was, again, have I ever taken a big loss, and what did I do to recover emotionally? What I did to recover emotionally was that coming out of 2000, the only thing you used charts for were basically just to look at how amazing the charts of every single stock looked. But what I wasn't using them for was for early warning signals as to when the bubble might come to an end. I was able to do that during the dot-com bubble. But back in 2000, I was not doing that. And I was selling naked puts. So I was generating a lot of income through late 1998 through 1999. Then at the peak, I was overly weight, being short of put options. So it magnified my losses. And at that point in time, coming out of a bubble, everything was by the dip. Everything was by the dip. So what did I do? I eventually took my losses. And taking my losses was the best thing I did, because I stopped the bleeding. I thought it would kill me to take those losses. It didn't. I was able to now think. And then I was able to evaluate how never to be put in that position again. And not that I haven't taken losses since then. Of course I have. But learning the charts. I spent a lot of time of reinvesting back into myself because remember, there was a 2-year bear market thereafter. So I had a lot of time to study, analyze, test the market. And it's a great time to learn technical analysis during a bear market because you had so many counter trend rallies that will rip your face off rallies, but they only served to fail. And that's what I learned is that beware the counter trend rallies in a bear market. So when that bear market ended, I was far more educated in terms of technical analysis than when I went into the bear market. So it was an education. That loss was an education that paid for itself many times over since then. Good question, though. Thank you. Did you stop trading for a while? No. I stopped trading. No, I had to lick my wounds because I fought the market originally. That was the problem. I was fighting the market, and I wasn't admitting to the fact that, you know what, this is bad. This is getting really, really bad. So I cut my losses, moved to the sidelines, sat, watched, wait. Best thing I ever did. So yeah. The one thing I will agree with Jim Cramer on, when he says this, it always reminds me of that time of when you have a bad trade, stop trading. That's why I don't day trade. Stop trading. That FOMO will kill you every single time. Okay, let's move on. TXG, weekly chart. We've been trading sideways. I like biotechs. I like healthcare. In particular, CURE, which I meant to go over on best stock charts this week. I just forgot to do it. So what we're dealing with here on TXG is a beautiful cup handle formation. They attempted to break it out last week, but it was rejected. If they break it out and they close it, above this resistance level here, I would be a buyer. But the closer you can wait until Friday, the better. Excuse me. Well, you have an abbreviated week. One is Christmas. All right. So the closer you can wait till Thursday, the better off you will be. Because that would be a successful breakout on a weekly time frame. You want to make sure you close above this resistance level. Daily chart. My phone's blowing up here. Interesting. This is a beautiful, beautiful spinning top formation, or very close to a doji star formation. I think this one is getting ready to be a buy very, very soon. You want to make sure that we hold support and that we move to a new weekly high, akin to where I just set up that alert. So I like TXG moving into the new trading week. Looking good. Walmart. Walmart, this is not a favorable period of time for Walmart. Beware. I'll show you. We'll go back to, let's go back to 2000. Okay, so going back 21 years, the month of December, we're only up 38% of the time. And it doesn't get much better in January and February. Things begin to turn around in March, but then they drop off again. So it's really the summer months where actually late spring, early summer, where you want to begin accumulating a position. Right now, not a great period of time. Let's look at the chart though. Seasonality is not always 100%. But we are weak. We're holding on to support at the 20-period moving average. That's not strong support. Daily chart, I don't like it. I don't like it. I think we had a dead cat bounce. This would probably get resolved to the downside. I don't like it. I would avoid. Tesla, everybody's favorite. Everybody's favorite. Monster. Incredible. Weekly chart. It's a buy. I don't know why people want to short this stock. I've never understood it. Stock's a buy. I mean, a massive weekly breakout last week. Might we retrace back down to the support level? I hope so. Let's create an alert. It won't let me. All right. Let's go to a daily chart. Maybe I can do it there. I think I already have an alert set here. Yeah, I do. Oh, it's triggered. Let's remove that, reset it. If we get a pullback, I think Tesla, you can buy it. We'll keep that active for the week. And we're good to go. Tesla looks good. Bullish reversal bar on Friday. I love this. They broke it out on Thursday, right? Then they pulled it back on Friday, did a retest. Buyers just swamped it. Moved in, bid it up. It's going higher. I would not short this stock. Maramigo, Bob, when do you think the COVID stocks will run out of steam? I'm thinking that, well, in terms of the players in the medical side, I mean, Pfizer, look at Pfizer. Pfizer looks like it's going to go lower. But I think you're talking about the Zooms of the world. Zoom doesn't look awful. But, even with Zoom, you might be putting in here this is the quintessential COVID stock. We may be putting in a W formation here. Left side, here's your pivot point. The highs of the week of November the 30th. Now here's your right side potentially forming. So that's potentially. I'm being optimistic right now, but here's the reality. The reality is that ever since October, we've been putting in lower highs and lower lows. That's the fact. That's the known. Now, there's a possibility that we're setting up for a W formation, but to trade off of that is hoping when we should fear. So looking at this chart, looking at the chart of Pfizer, I already think that they've lost their luster. So especially with the vaccine being distributed as fast as it is right now. Hey, Paul. Happy holidays to you, my friend. Trader Isaac, EXAS. Raindrops. We'll look at that one. Bob. Excuse me. Mac Carter. What could the tips do if they vote yes to the 900? They could sell off. I don't think that they will, but they could sell off. Remember that a lot of what we're seeing right now, before the election, the market was very weak. It was only after the election that the markets began to pick up steam. And the reason why is that there was hope of a deal. Now, if you take a look at IWM, let's go to a monthly time frame. They're up for the month already 8.25%. They are leaning into, think about this, they're leaning into the third standard deviation Bollinger Band. Volume is dropping off. So were I pressed to say, do we get a sell the news event? Probably so, because I think that the markets have already priced the package in. And it's much smaller than what was initially offered. Let's check out spiders. Not up that much, but very extended here. Tues. Before we leave here, spiders up 2.4% on the month. Tues up nearly 3.5% on the month. I mean, these are respectable moves, especially when you take a look at the November moves, and we're only in the beginning of the last half of December. These are some significant rallies here. So I think it's priced in, and I don't think it's enough. I've been saying that. I don't think it's enough. They offered nearly $2 trillion. That's what's in the market's mind. They wanted $2 trillion. They're not getting $2 trillion. And think about it. What are yields doing? They're going up. Yields are going up. Not going down. They're going up. That is not going to bode well for this market. Pelosi's going to do a press conference? Oh, God. God help us all. She's going to do it tonight? That should be interesting. Let's take a look at the futures. Not much change. All right, we have a bunch of stocks to get through here. Let's go back. So, leaving off with the COVID plays, might we see a rally here? Sure, but as it stands right now, lower highs, lower lows, that's the known, and we'll wait and see whether or not we get strength. Otherwise, I would avoid. Tesla, we did. Trill. Boy, oh boy, oh boy, oh boy, oh boy. Outside reversal month. This is bad. Very bad. The weekly chart's not bad. I mean, we retested the support level. We closed back above another one. That's bullish. I mean, if you want to speculate, you want to buy, sure. We make a new weekly low, you got to be out. I would stay small, test the market. Let's take a look at the daily chart. Note these volume shelves here. You got a lot of resistance above. 1317 is resistance. Again, if you want to speculate, fine. The weekly chart looks good. Maybe that was the bottom. Let's do one other thing here because I have a rule. Here's what I would like to see happen here. The Stokes are looking okay. That's what I really wanted to take a look at. What I would like to see with Trill is that it pulls back and fails to put in a new lower low and consolidates and forms a W formation. And the pivot point for that W formation would be the highs of last week. So I think the best thing from a risk-reward perspective is that it pulls back. You want to nibble? Fine. Use a stop loss right below 1105. And then if we base and then begin to hook back up, then you start adding more on strength to that trade. You want to look for a W formation. I don't see any rush to go jumping in here, buying hand over fist. Because when you have your Stokes just beginning to hook up, there's a lot of backing and filling that happens. $600 check, $284 billion in PPP, $20 billion in small business grants. Okay, so that we'll just provided a breakdown of where the money is going to. And Pelosi's going to speak tonight. All right. Okay. Let's move on. EXAS. Exact Sciences. I haven't seen this one in a long time. Nice. Daily chart looks good. This looks like it's going to go up higher. $125, 126 is support. Resistance at about 140. I think it goes up higher. Daily chart. Continuation breakout. I would like to see it close above 140. We're just shy of it. We get a close above 140. It consolidates there for a day or two. You're going up a lot higher. This is a good looking chart. I like it. It's a buy. We'll leave off with CLSK for Chris. Clean Spark Inc. Daily looks interesting. I don't know this stock, so let's pull back. Monthly breakout. Very nice. Weekly chart. You're extended on a weekly time frame. That doesn't mean it's not moving up higher. What I'm referencing is not RSI. Where's RSI? 75, it can go higher. What I'm referencing is your third standard deviation Bollinger Band. It's very extended. That might get alleviated tomorrow because we'll open up a new candle, probably outside of that bar, most likely. I should say band, not bar. Daily chart. A little bit of a fade on Friday. That being said, Many times when you see that after a breakout, you'll get a retracement. So I think it's a buy on a retrace back down to support. Jesus, Bob. That's how I would play this. If you're a momentum guy, you want to buy the breakout, new higher high, fine. But from a risk-reward perspective, I like to see a retest here of support, then look to get long, open up your position, add more on a breakout to a new weekly high. And with that, folks, I'm going to say I have one more to go. I was going to go, but for MacArthur, I didn't do NNDM, did I? Let's leave off with that. Larry, we sent you 3 jackets, about all different sizes. One of them should fit you. Let us know. And it does look good. You did a great job. And thank you, Larry. Thank you very, very much. I didn't read the card yet. I'm a very, how do you say, I guess sensitive. So I didn't want to shed a tear reading your card because I remember, here, I always keep it right here. This is the last note that Larry wrote me. Very, very kind note. I keep it right by my desk at all times, and I'll probably have it framed. So I didn't want to read this in front of, what do we have on here, 55 people, and then begin shedding tears. So I don't want my voice to crack. So thank you again, Larry, and happy holidays to you and your family, and thank them as well, please. Much too generous. Much too generous. Thank you. Okay. We'll leave off with, this looks interesting. Nano Dimensions. Huge base. It's breaking out now, or it has broken out. It looks like I've already gone over this one. It's my manual line. I look at so many charts, I don't remember them all. Resistance there. A wee bit of resistance here. We saw resistance last week. Let's drill down. Monthly time frame looks rock solid. Ooh, weekly chart looks good too. We broke out above this volume shelf. Really, really good support down here. You could argue that we broke out last week. Technically, we did. Very nice. Look for continuation, move higher this coming week. I think it's a buy, but the only caveat I'll place is this, is that I would test the market. I would stay small as always. And then as we overcome these resistance levels and close there, add more. Build your position. Daily chart. I think it's going higher. We broke out on Thursday, retest on Friday. It looks like it's a buy. I like it. And with that, everybody, if I could ask you to please smash that like button, hit the subscribe button, and everybody, if you're going to check out, have a great Hanukkah, great Christmas, and have a great time with your family. Stay safe, and I'll talk to you soon. Be well. Thank you, Big Bear. Thank you very much. Baba Pops, say to you, my friend, thank you. Be well, everyone. Thank you.